stocks here such as Bristol-Myers Squibb, Kraft Foods. Those of you that have listened to me on various webinars know that I'm in a Kraft position right now that I opened in December. I have the put out to January 2011. I originally opened the position with a 5.5% risk. I've been bulletproof since February. I'm collecting a dividend. I'm still able to collect a dividend with no risks when I applied 2 different income methods. And I still have the opportunity to do more income methods as the stock continues to move up in price. Comcast and so forth. Now, this list still might be too much for me. You see down here at the bottom that I have I have a total result of 193. Now, let me just adapt a few more criteria here. What I'm going to do is change this to be between 4 to 7%. I'm going to limit that risk and resubmit it. This might cut out about half of those results. Yeah, well, no, a little bit less than that. I only cut out about 60, so I still have 138 total results. But you see how you can keep customizing this search tool. You can narrow it down to just what you want to see. Now, I am sorting this by lowest maximum risk from lowest to highest, but does this mean I'm going to jump on the first position? We'll look at that Bristol-Myers position, trading at $25.88. We're shown that we could purchase the March 29 put option for $4.55. And this gives us a maximum risk of 4.1% between now and March expiration. And the annual dividend yield here is about 5%, but we're not going to see all of that because we're not 365 days out in time. Barry just asked, can you sort using the IBD 100 as a starting point? Yes, that's where we originally started. We were using the IBD 100 and CanSlim list that you can select from that main menu. That's the starting point when you first pull up that default radioactive screen, Barry. Could I now say, show me just those stocks in the IBD 100 that match this list? No, but let's make that change, Barry. Again, very simple. Let's scroll down to the bottom. Okay, so I ran my universe of stocks that matched my criteria. I was using no lists, so I opened it up to the entire universe of options. But let me keep these new adjustments I made for my earnings per share growth, price per earnings, dividend yield, and then take a look at just stocks in the IBD 100. So I'm going to keep all of my other criteria, but now limit it to just IBD 100 stocks. There's one. There's Hasbro, and those of you who joined me Saturday saw me discuss this position as well. Hasbro currently trading at $42.71. Have a January 45 strike put at $4.90. So our maximum risk is $261 or 5.5%. Now, let me open this up to the IBD 100 and CanSlim. Let's increase that a little bit, see if we get more results. And if I wanted, if I wanted to, Barry, I could also look at just the S&P 500 or the S&P 5-star stocks. Okay, so this one result, Hasbro. Let's go back to discussing if we had more results. And I actually want to do that. Let's go back to the no list. Just because that position we originally saw when I was using no lists and not limiting it to that IBD 100 list, we have ADP at the top of the screen now. This is in real time. But just because this has the lowest maximum risk, is this the position that I'm going to trade? No. I want to do further research and analysis. And to do that with one click, we're going to use that More Information button over on the left-hand side. The first thing I'm going to do is I'm going to take a look at the stock chart. The married put setup is a bullish setup. We're expecting the stock to move up in price. Now, you can customize big charts and save your settings with a cookie. I have Bollinger Bands set here, relative strength, and some MACD information. Now, let's say I look at this chart and it looks to me it's more than flat. Not intrigued by this chart, so I'm going to go ahead and just close the window. Now I'll move to the next position. Avon Products matches my dividend requirement. Matches my maximum risk, still at about 4.2%. Let's take a look here. And I'll take a look at big charts again. No, the stock has had a tumble. Great thing. If I was trading Avon over here, I would have wanted to have protection in place. But now it's started to come back up in price and it's crested a little bit above the upper Bollinger Band. Not that I'm going to tell you how I analyze stocks or what I'm looking for, but this might be a decent chart to look for. It might be something that matches what you're seeing. Okay, so take a look at the stock chart. Looks good. I like this on the second position. What's my next step? I'm going to use that More Information button again, and I'm going to link actually to the news and to the profile. I want to see Avon Products. I want to make sure what profile, sector, and industry it's in, but I really want to take a look at the headlines there. I want to make sure that there's nothing too strong, that there's nothing, no recent headlines that would cause me pause to enter the position. What am I going to do next? Well, this is a great position. January 35. But what if I wanted to see, I see below that Axis has March options. What if I wanted to see if Avon had March options to give me more time, but still was under my 7% risk? What if I wanted to maybe take on a higher risk, but if there was a 32.5 January opportunity? Well, let's compare it now. What I'm going to do is go to the search by symbol screen for my results in the Avon position. Here we see the January 35 strike put position has a risk of 4.1%. That's where we just linked over from. But there are other opportunities here, aren't there? The 34 strike put, just $1 strike below, option ask of 430. My risk now would be $1.81 or 5.1%. But the January 33 strike put still is within my risk threshold of under 7%. Why would I choose the January 33 put over the January 35 put that was at the top of my list? Well, if I'm analyzing the married put positions, the 35 put is 11% in the money here. So the rules in the blueprint discuss that when the stock moves up in price, usually trading right around the strike price of your put, that's when you want to look to apply the income methods. So in this case, if I have a stronger sentiment that Avon at 31.51, it's more likely in the next 30 to 45 days that Avon would be around $33 per share, and I would apply one of the income methods at that point. Maybe it's okay to take a slightly higher risk. It's still within my threshold. It's a 6% at risk. It's still within my range. But I have a better expectancy of the stock maybe hitting that price and then moving on. Oh, I'm sorry, doing an adjustment with one of the income methods. Okay, so this is what you want to do. Compare it. After you've looked at the stock chart, you've identified your positions, you've looked at the stock chart, you like the chart, link to the search by symbol tool here to say, okay, are there any others that are still within my threshold and match my expectations better, even though I might be taking a greater risk? Okay. Barry just asked, again, he just brought up the point that the option chains that you use have weekly options. Absolutely. You can scan for weekly options. I'll add real quick, you don't want to open a married put with a weekly option, but maybe there's some opportunity to apply an income method to a stock you're using that has weekly options. All right, let's go ahead and close the search by symbol tool. We want to go back to our search screen. The last step we want to do on PowerOptions is sort of run our what-if scenarios. And to do that, we'll select the profit and loss chart. Now this will give you the standard hockey stick graph that we saw before. Okay, we see our risk of 4.2%. This is based on 100 shares. If you wanted to analyze this, you could scroll up to the top and, analyze this using different shares. You could plug in a higher value if you want to analyze what this would look like with 200 shares, 300 shares. You can just make that change and hit submit. You see here what we talked about earlier when we saw in that GMCR position. As the stock moved up, the put does not drop 1-to-1. Now the blue hockey stick graph, this is our risk-reward at expiration. If we hold the position all the way to January 2011 and make no adjustments, this is what we'd see. You see at the halfway point it's more curved. So the put won't lose 1-to-1. And down below, if we wanted to see what our position would look like, if Avon did say move up to $33, by mid-August, let's say late August, by 8:30, if Avon moved up to $33, let's put in our what-if scenario. Well, you see we'd have about a $146 gain on our stock. We'd have roughly a $134 loss on our put, and that would give us a profit of $12. All right? And, of course, you see that our original investment was $36.54. In order to realize a small profit here, did I need the stock to move up to $36.54? No, I didn't. I just needed to move up slightly, but I wouldn't liquidate the position for that small of a gain. What we would look at here is what we're looking at here as the stock moves up is just some of those, where would I apply an income method? And let's talk more about that right now. Let's go back to the main slides here. Okay, I just want to go back. What's different now? What I want to talk about is, okay, so we've entered a position, we've analyzed it, we'd put it into the portfolio, and we want to talk about with bulletproofing with number one. Now I realize I've gone over time and I apologize. I'm going to review 2 of the income methods and discuss that. And what I want to show is a recent example of bulletproofing with income method number 1 in my personal account. I'm going to show that in the PowerOptions portfolio tools as well. And then I'm going to discuss the variations. First, I'm going to answer a couple of these quick questions that come in. Ken wants to know, in buying the put, is open interest important? Yes, I feel that it is. I can use a screen on PowerOptions to look for the volume today or the open interest, and that would give me the positions that I want to see that match that criteria.